following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
All right, we are back, NinjaTrader Live. My name is Jim Cagnina. Joining me live from Chicago, Illinois, Craig Bewick, CME Group. Craig, how are you?
Good. Good morning, Jim.
How's everything going?
Good. I haven't been on a little bit. I think is this the last one for the year?
I believe this is the last one for me and you for the calendar year.
I can't believe it. it. We'll have to make it a good one then.
Yeah, we always try to make it a good one. What are you talking about?
It has to be an extra good one today.
Extra good one. All right, that sounds good. Yeah, and you're not missing much because we're going to take a break that last week of December for people could celebrate the holidays. So
yeah, it makes sense.
Yeah. So anyway, new stock index futures product. Let's talk about the Nikkei. The Nikkei 225 stock index future. This is the large cap stock index futures, the main one in Japan, right?
Yeah, it's the main the sort of main one. We'll call it the main one, the benchmark, I guess, index of Japan. But what's kind of interesting is that it's not necessarily as much like a technology index, like as our NASDAQ might be, and even kind of our S&P these days is has a lot of technology, and it's more like industrial, automotive, healthcare. But it is kind of the benchmark index for Japan, and certainly there's a lot of money that's benchmarked to it, and kind of a barometer of that economy in some ways.
Yeah, so it's 225. I mean, there's, Sony is a name that you'd recognize. SoftBank is a name you're going to recognize. Companies like that, and a lot of names you won't recognize either. But it's some common stocks that maybe we all own.
For sure, and and that's kind of a good segue into actually kind of taking a step back. And here's why I think it's interesting, particularly right now, as the value of that index has finally recovered to all-time highs earlier this year after, what started as kind of a lost decade, they called it, became, 2 or 3 decades. But if you step back and I'll date myself a little bit, Jim, but in the late 80s was kind of like when I started taking, generic business classes, let's just say. And I feel like every case study I did when I started learning about, quote, business was about Japan, about the kairetsu, about like their just-in-time inventory systems. And then you would do a case study on like Toyota and the quality control. And, and it seemed like they were kind of the envy of the economic world for a while in the late 80s. And as you can see in that graph in front of you, it was, right? Like, from 1985 to 1989, the Nikkei jumped by 237%, while the S&P was still up strong at 113. But the Nikkei really far outperformed the S&P during, the second half of the 80s, until it didn't, right?
Yeah, right.
And it turned out it was kind of a bubble, right? And the bubble popped. Really, it was kind of the last day of 1989. The bubble popped. The real estate market corrected by 60%. And here's an interesting fact. I know you've had Eric and both Eric and Jim Uriel on your show a lot. Eric brought up a fact when we were doing a video on this, that in the late 80s, the Imperial Palace in Japan had a higher land value than the entire state of California.
Wow. That's amazing.
Right. I kind of, when we were doing it, I sort of I said, really? but yeah, so, it turned out it was kind of a, a big bubble that popped, and, you can see the decline, and there's where you can see, after 1990, the difference in that S&P chart and the Nikkei chart that you have really becomes very different until pretty recently, right? Where the S&P kind of had a steady, obviously with some corrections along the way, but kind of a steady climb up to where we are now, where the Japanese economy kind of stagnated for a long time, right? A long time ago, they call it the lost decade, and it kind of became longer than just one decade.
It did. It really did. And even now, I mean, if you look at the currency pairs, the yen is still, scraping the barrel versus the US dollar. And, maybe they think that's good or not. I don't know. But it's been in that downward trajectory for many, many months, and which is kind of in juxtaposition of this. I mean, this is a really, I don't know, I would say scary rally, like not bubble level, but it's looking pretty good. We finally hit that. How long did it take? 2000. This is like 34 years.
Right. I mean, that's, unfortunately, I think, people that are our age don't think of the 90s as that long ago, but it really was, right? So it's been a long time. But you're absolutely right about the currency, because, when this happened, the economy wound up in a deflationary state. And GDP went from, or debt to GDP in Japan went from 60% to over 200%, which is double what it is here. And they talk about our debt to GDP being large. In Japan, it's over 200%. Their interest rate went to zero in the largest QE that was ever undertaken in history. And really the rate stayed there for, almost, until now, right? I don't know if you remember earlier this year, they raised their interest rate by 0.1, like 10 basis points.
Yeah, I know.
Not even a quarter point that we do here. And that was a big deal, remember?
Yeah. And they were negative for a while, right?
They were negative for a while.
Yeah.
So it's been an interesting kind of juxtaposition with the US economy, but like we're saying, but the rally recently now has brought it back finally to its all-time high levels.
Yeah. So, and just to compare, I'll just pull this chart up again, if I can. So here's the S&P over the same time frame. This is crazy. This is S&P over the same time frame, right? It's just, steady Freddy, right? And
that's what I mean. I mean,
yeah.
that's exactly what I'm saying. And, obviously we had some corrections along the way since the 90s, but, that line is pretty generally upward sloping, where this, is a much different picture.
Yeah.
And I think you actually hit the nail on the head too, when you were talking about the yen weakness. They're, I think, the fourth largest exporter of finished goods. So in some ways, a weak yen kind of helps them, because they are sort of a net exporter of finished goods. So in some ways, there's an incentive for them to kind of keep that yen at a lower value.
So finished goods meaning like furniture or
just not they import almost all of their energy, but they export the finished goods. So they're trying to sell those obviously to other countries in different currencies.
Got it. All right. So let's talk about trading for a second here. We have a couple of different products in the Nikkei stock index futures suite to choose from, right? We have some stuff that's existed for a while. And by the way, folks, it's an Asian market. So I don't know how many phone calls I get and emails I get say, hey, Jim, I can't trade until after dinner and the kids are doing their homework. What's a good market? Well, there's Asian markets that are opening up, right? And currency pairs as well, but that's a sidetrack. So we got a couple different flavors here, right?
Yeah, and actually there's a couple that we've had, like you said, and then there's a couple new ones, and we can kind of get into that. But you're right, and obviously all of our markets trade around the clock, but this is a Japan-based, Asia-based index that is going to open up, like you said, kind of when the kids are going to bed here in the States. So so historically we've had what I might call, or what we would call the standard Nikkei 225 future And within that, we have two different Nikkei 225 futures. It's, the vernacular gets a little bit weird because in our US based indexes, we call the standard size the mini now. In Nikkei, there is no mini Nikkei. It's the Nikkei. And then we'll get into the micros that we just introduced. But so the Nikkei 225 has both a US dollar denominated future,
Yep.
and a Japanese yen denominated future. So let's just look at the dollar first, because I think it's a little bit easier, for us in the US to sort of conceptualize. But so the dollar-based index is worth 5 times the index value, which is just slightly, I think, under 40,000 points right now. So the standard dollar-based index is worth about almost $200,000 worth of Nikkei 225 exposure. So it's a fairly large futures product, particularly when you consider that the Nikkei can be at times a little bit more volatile than, some of the stock indexes that we trade here, like the NASDAQ or the Russell or things like that.
Mm-hmm.
So with that Nikkei 225,
So I'm sorry, Craig. Here's the thing. Yeah, it's a $5 US dollar multiplier, and but it's a $25 tick. Which is, to your point, it's a big contract.
Yeah, I was actually, you took the words out of my mouth. So the tick size, with the way that it's quoted, does turn out to be $25 on one tick.
Yeah.
And again, it's an index that can be a little bit more volatile than some of even the US based indexes. So, it's a rather large product. And then the other product that we've had for a long time, like I was mentioning, is the yen base. So the way to think about that is that the yen based Nikkei 225 future is 500. The value of it is 500 times that index value of, again, just under 40,000. So that's a contract that's worth about 19.7 million yen, which, if you convert that into dollars, is actually a little bit smaller than just because of the currency, because of the currency values, is a little bit smaller than the US or the dollar denominated index at about $131,000 if you convert the standard yen based index into dollars. And the reason that someone might want to trade the yen, and the reason I should rephrase that, the reason that we have two different futures contracts is that if someone, let's say you're an American and you just want exposure to the Japanese economy, but you don't want the currency risk, then you can trade the dollar denominated version. And it kind of takes out that currency risk from the equation. But if you want both exposure to the currency and the index value or the stock market value, then you can trade that yen-based index. Does that make sense?
Oh yeah, totally. It's just, it's a hard concept to get your head around if you're not used to it, because most of the asset classes are priced in US dollars, right? So it's not something you have to worry about. But if you want to ameliorate this this cross currency risk, then you have a yen denominated contract.
Yeah,
So,
if you kind of put, oh, go ahead.
My guess is if you live in Japan, this is what you're going to trade.
I would think so, right? I mean, but I think there's probably a lot of sophisticated individual traders, maybe even here in the States, that do kind of watch both the currency, because the Japanese yen does tend to be more volatile than other currencies. That maybe, and that's kind of, I think, what makes this product really cool is that, you can play both the stock market value and the currency value with one contract. So if you're someone that's, for whatever reason that you're interested in it, you've studied it, and you want both exposures, then then you might trade the yen. I think you're right. I think most Americans probably, because it's simpler and it's a $25 tick, would probably gravitate more towards the US dollar based index. But, I think it is kind of cool that you can incorporate that currency fluctuation into your trade if you want to. But to your point, though, the standard yen-based contract at about $131,000 has a tick of 2,500 yen, which means that if you're, let's say you're an American trading that product, well, you want to know what that sort of equates to in dollars, which is about 16 in the current, somewhere around 16 with the current exchange rate. But that is another element that you'd have to know if you were trading that yen-based future.
Yeah, and if your account is in U.S. dollars, then you have that statement conversion at the end of the day, and everyone's all confused.
Right.
Anyway, so at least, no, I shouldn't say everybody. I am. Let's go over now we have a micro Nikkei.
Right. So just like, and I was mentioning it before, if you go back in history at CME, we actually, there was an S&P contract that was the standard S&P that we've since delisted. But the reason that, we introduced the mini S&P futures was that contract had gotten so big, and now the mini is our bigger contract. But as I think probably most of your listeners know, about 5 years ago, we introduced the micro US index products, the S&P, NASDAQ, Russell, and Dow. And they've been, by a lot of accounts, the most successful futures product launch that the exchange has had, because those minis had they, quite frankly, they weren't minis anymore, right? At the S&P at 50 times the index value, or the NASDAQ at 20 times the index value. Those had become really fairly large contracts for a lot of individual traders. So just like we did for the US based indexes, we recognize that at almost $200,000 for the dollar-based index for the Nikkei 225, that was like we were saying before, that's a fairly large contract, especially on an index that tends to be a little bit volatile. So we've introduced now the micro versions of both the dollar-based and the yen-based futures. And similar to what we did with the US indexes, we made them 1/10 the size. So instead of 100, almost 200,000 on the US dollar-based index, we're looking at about $20,000 worth of Nikkei exposure for the micro. And then for the yen-based, if you turn it into dollars, it's about a $13,000 notional value, or $13,000 worth of exposure on the yen-based Nikkei 225.
Okay, I'm pulling that one up right now. I'm just using your contract specs page to make it easier for me. There it is. This is the micro Nikkei futures contract priced in yen, and there's that 50 yen times the index unit. Right.
So instead of 500 times the Nikkei, the level of the Nikkei, it's 50 times. So your tick goes from, what did I say, like $16 to $1.60 on the yen based, and then of course on the dollar based that you were bringing up earlier, what is a $25 tick on the big Nikkei 225 is a $2.50 tick on the new micro. So just like the US based indexes, it's just a more manageable size for a lot of individuals who want exposure, to this benchmark Japanese stock index.
Yeah. Gotcha. All right. And now these things, the micros, when were they released?
It's probably been about a month now. I can't, the exact date's escaping me, but about a month ago. And, I think we're doing daily volume of 7,000, I think, in December, if I remember right. So it's been a very successful launch. Certainly when you look at the volume and open interest in these products, it really kind of underscores that there was some demand for these smaller sized Japanese based indexes.
Yeah. Yep. No, for sure. I just added it to my quote board recently. I'm paying attention to them now. It's one of these things where, especially when you see the chart that you showed us here, it's still up on the screen. Yeah. I mean, now it's like, all right, now you have because when you have these higher numbers, then you also have bigger average true ranges. And those bigger average true ranges give traders more areas of interest to participate in, whether long or short, whatever it is. It expands the opportunities, in my opinion.
Yeah, that's exactly right. And, and that's opportunity when things are moving, and within those ranges, that is potential opportunity for traders. And I think the other thing that's kind of cool with this is that, it also introduces spread opportunities for traders who want to take a position on, for example, like what's the NASDAQ performance going to be versus the Nikkei 225? Because, we've talked about before that even within the US based indexes, we can have, some periods of dislocation where, maybe the NASDAQ outperforms the Russell for a period of time, and then the small cap Russell, because of whether it's an interest rate environment or, some sort of economic thing that happened, maybe or even like a policy decision by the government. We can have these periods where even within the US based indexes, they can become uncorrelated and can present trading opportunities. Well, here's an index, that probably has a higher propensity to be uncorrelated, or to at least have periods of times when they're uncorrelated with the US indexes. And that can present trading opportunities in itself.
Yeah. And there's also a sensitivity to like Asian geopolitical, right? So, I mean, we saw this recently with the Nikkei and how it responded to the South Korean, whatever crazy thing happened there in South Korea. We saw the market react real quickly on that, probably more so than the US market did.
You said in a better way. What I'm trying to say is that there are different factors that can affect this stock market that might impact, and maybe something like that's going to affect all of, stock markets around the globe, but maybe it's going to affect this one faster or more profoundly than it might affect, let's say, a stock market here in the US. So with this smaller size, now we've introduced, kind of an easier ability if somebody wanted to trade like a micro S&P or a micro NASDAQ against the Nikkei. Well, there's a smaller size Nikkei now, a micro Nikkei, that they can then sort of do that with. And then, another thing within that too is that the notional values aren't exactly the same, right? So, if the micro Nikkei is at, let's say, $20,000, I think is what I said before, and the NASDAQ is bigger, and you want to take a view on like the Nikkei versus the NASDAQ, well, now you've got to figure out, do I want to do two Nikkei against one NASDAQ because that gets me closer to sort of the same exposure? Or do I want to do one Nikkei because I think it's more volatile than, going to be more so even within that sort of ratio becomes a trade opportunity in some ways.
Yeah. If you're going to spread it, you could decide your own ratios. You don't have to be perfect.
Right. And you can do that based on like how volatile you think it's going to be, how much you think one's going to outperform another, and things like that. So, I think it's a great time, for us to have introduced this micro. The fact that the stock market has recovered, there is, there are some geopolitical considerations for people to take into account. And quite frankly, if you look kind of at individual or retail trading around the world, it's actually, I think, one of the top 5 indexes that's traded, global stock indexes. If you look at like all the different markets around the world, it's a very heavily traded index by individual traders.
Yeah, it's a major benchmark.
Right.
Yeah.
And this, this graph in front of you is, we've looked at this, I guess it wouldn't be a show with me without doing a CVOL chart, but that's what we're looking at here. So I just graphed the, 5 major currencies: the euro, the pound, the yen, the Aussie dollar, and the CAD, the Canadian dollar, just to show that the yen, and again, this is implied volatility. This is a measure of implied volatility option. So it's a measure of how much price movement the option is pricing into the future. And you can see that green line is the yen. And I guess earlier in the year, it wasn't necessarily the most volatile of the currencies, but certainly the second half of the year, it really has been, and clearly the most volatile of those 5 currencies.
Yeah, no, that gives us a good kind of relationship between the major currency pairs. We talk about these all the time, for sure. But to see the yen, yen's a tough thing because, when they change their policy in Japan, it's very slow and very deliberate. If you compare to what happened, so when we started this rate cutting cycle a couple of Fed meetings ago, it was 50%. There wasn't a 25. Right. That wouldn't happen in Japan.
Right. I mean, we dove in with a 50 basis points cut on the first one. Japan did 10 basis points, and that was a big deal.
Big deal.
Right. And that was even a big deal. So, it is a little bit different. And like I was saying before, in some ways, they have to strike a balance between deflation, but then, a strong currency in some ways doesn't necessarily help them that much. So, there's a lot of factors that come into play for all of the central banks, right? But because Japan has that, that factor that they are, very big exporter of finished goods, that comes into play as well, as the central bank has to consider deflation and everything else. So it's an I think it's a very interesting trade. And I think these products do make it a little bit more manageable for an individual trader to take a look at, the Japanese stock index.
Yeah. Throw in a couple of tariffs next year and who knows what could happen. Anyway, it's a major industrial power. So this will be a really good stock index future. I'm glad you guys launched it. All right, man. Well, we're up against time. This is it for calendar year 2024. Craig, I appreciate all the times you've appeared and all the good information you provided us.
Yeah, it's been my pleasure, and I want to thank you guys for allowing me on. I think it's good. Hopefully your listeners get something out of it. And it's been fun.
Awesome, man. All right, Craig, thanks again. I'll talk to you soon.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.